Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames so that we already have a plan and we can tackle the market the next day with much more confidence and clarity. And while we are doing so, we also learn various price action concepts and how we can simplify trading for us and win in the long run. So, in case if you guys like the way I put out the daily Nifty plans as well as the price action concepts in a simple way, please do not forget to like the video, subscribe to the channel, share it with your trading friends, as well as put down anything that you might have to say in the comments box. On that note, we'll start with today's video. First, we'll be starting with what we had planned uh, yesterday versus how was the expiry today, what trades did we take. We'll cover everything in detail. Where was the initial SL planned? What was the target? What was the trailing SL method used and everything? And then we'll jump to the second part, which will be planning the trading day for tomorrow. Right. Again, today's video is gonna be very important. So please watch the video entirely because in today's video, I will be covering some details on how to save yourself from exciting or volatile market like today, wherein SLs are being hunted left, right, center, everywhere, right? So I hope you anybody who would have traded today's expiry would have been on the safer side if you just add on a few simple layers of you know picking up your trades, as in few filter layers which can save you from such volatility, and we'll be coming to that pretty soon. uh, in case if anybody of you would have traded today's expiry, please put it down in the comments. How was today's expiry as per you, as per your experience in the markets today? Today's expiry was extremely volatile, and anybody who would have been observing uh, would have seen that, right? All right, so we'll start with today's video. Markets opened with a gap up, immediately went into a sell down mode, also breaking down below day's low. This was the first trap. Market broke down below day's low, broke down below yesterday's closing, and people are very, very quick to jump into the trades that okay, the gap up has not sustained. We are looking to short the markets. Markets goes up and creates a new high. Our plan was to look for a shorting opportunity around here below this particular level, or and we do not short on the first pullback. We need for a confirmed price action based on a double top. So in case if market would have come here, did not would not have broken this particular high, or even if breached it for a slight moment and then came down here, this would have been a good short trade. Or in case if market would not have given this particular move on the downside, would have given us another closing or above this particular zone, a pullback, we could have created a long. Now, we had planned a long above this particular high with a pullback. Now, markets did come here, gave us a closing, followed through, went for some sideways action, also gave us the pullback that we needed, also went up above the pullback around here. But as you can see, it was a simple trap again. And I did not take this trade. And I am assuming that people who would have been following me would have also taken that call themselves on not to enter this particular trade. The reason being, I'll give you two reasons. Number one reason I always emphasize upon, try to see where is the market coming from. Is the market exhausted, or you feel that the market can go up even further higher? Market came back, came up till around here for us to reach our tradable long zone. Market had already traveled for almost a low of 25,430, and the closing, or basically the high after which the pullback came, was at 566. It was a 130, 40 point odd move which has already come. So after giving us a 130, 40 point move, can market directly after this pullback also move up? No. It becomes very difficult. It can obviously, since anything can happen in the market. That's the first rule. And you need to remember that. It can definitely happen, but the probability is low. And if you try to calculate the probability and enter your trades, that is where you can develop your edge. Now, the second point is again the RSI. While the markets made new high, RSI did not make a new high, it made a new low. So that is a negative RSI divergence showing. What does a negative RSI divergence show? A negative RSI divergence is simply showing the strength of the buyers here is fading away, right? It is not as good as it was around these levels if they did not even break these levels, but they are right now. The market is above that particular level, but the buying strength is not there. So relative strength, right? You're comparing this particular high with this particular swing high. And that was the reason with the negative RSI divergence, I was not too keen on entering a long entry around here. And I waited for price action to further correspond. So as we spoke, this was trap number one of the day, wherein shorters were trapped. This was trap number two, where people who would have been going long would have been trapped. Now, there was a short entry in the market, which was my first trade of the day, which was this particular swing low. When the pullback low, which was created when it was broken, I entered a short trade around here simply because of the negative RSI divergence plus a double top pattern being formed around here. And it got me a good trade, not a very great trade, but it was a good trade. I exited somewhere around here. Not a great risk reward trade, but nonetheless a good trade. Now, the second trade that I took was at the break of this particular high. Now, I'll come to the reason again very quickly. Now, as I told you guys about the expiry setup that I use, I put out the op open interest data or open interest charts from Sensible on my screen only on the expiry days. And what I observed today was that around the 25,500 mark, right? This was the strike price. You can go and check the data. It will still be available today on Sensible's website. Around this particular strike price, both call and put writing were good. And around here, when the markets went down here, it first trapped the put writers who had shorted. The markets went down, came here, and the put prices went up. They took SLs. Around here, market trapped the call writers by going above this zone. So there were multiple trappings being done in the markets today. And if you are observant enough, you are observing multiple factors that can uh, de decide which trade are you going up ahead with. That can help you guys a lot in the uh, real trading when you're trading in the real live markets. And as you can see, first they were trapped here, then they were again trapped here, then again market after going up, it again trapped the people who had created longs, again created a new low. Now, after this low was created, now this low was an important low for me. I will quickly be plotting this particular fib. So I'm sure, I hope I have, yeah. So this low was actually this entire up move which had come. So I was planning a trade wherein this was a lower high, a higher high was created, and if we are to go up ahead again, and we are creating a lower, sorry, a higher low, and then we can go up ahead. We can look for a long trade, obviously price action confirming. But that was the reason I plotted the Fibonacci around here, and this was the 0.5 to 0.618 zone around which market was taking support, kind of forming a base, also tried to break out. But then the moment this was triggered around here, we'll keep a note of this particular, this candle wicks which is there. I'll be removing the Fib tool for now. Now try to understand, like I tell you guys to talk to the market, what is exactly happening. Uh, I am also working on a trap trading system which is yielding good results. And once I am done with thorough back testing of the same, I will also be making a video on that. Not just back testing, I will definitely be trying it out for a couple of weeks more. It's been a couple of months that I have been trying and tracking this, but I do not actively speak on about this in the videos is because I am not 100%, I have not back tested it completely. I am trying to test it in the live markets, and this was one of the uh, trades that I had taken on the trap system. Now, try to understand this was an important low as per me. The markets broke down below this low. This would have invited many uh, sellers, many shorters, plus also would have triggered the stop losses of many people around here. And if market immediately has to reverse from here, market created a market created a very long tail. Now, this long tail is simply showing the presence of buyers, followed by two very good inside bars. And this is the high above which, if market would have gone, this means that people who would have shorted around here would have been trapped. And this is where I entered the markets. It was a good trade if you exited on time. Otherwise, this was another big trap on the long side. First, the people who had shorted were trapped brutally with this big candles. People who would have sorted the markets would have been trapped, and then immediately the markets reversed. People who would have longed the market here would have trapped only if you know when to get out. Now, I always tell you guys that in case of parabolic moves like this, book it out. Do not wait for another big candle around here. That is the probability of something like that happening is again very, very rare. Usually, after a parabolic one-sided move like this, especially on expiry, is followed by a move like this. Now, did I trade this particular move? Absolutely not. Absolutely not. I had just finished a very good, wonderful trade around here based on the trap trading system. More on it coming soon in further videos down the line. So please make sure you are subscribed to the channel. And post this particular move on the downside, we can see we again retested those levels, gave us a small pullback. This is the time when I marked this particular low as an important low once again. And in case if we are going below this, I had a hero zero plan again, trade again plan, which I tell you guys, which is post 2 p.m. on expiry days based on open interest. Not only did people from 25,500, the put writers, not only from the 25,500, people from around 25,400 till 500, 450, 400, all of them started exiting. Just go and check out the open interest and the change in open interest charts. You will be seeing the same thing around here. And that was the reason why I had marked this particular low, even below the 25,500 mark. Below this, but this low was important low for me. And as soon as this low was triggered, I entered a short position. Again, this was a very good hero zero trade. This is the only trade that I took in the current week's expiry. And the rest of the two trades that I had taken were in the next week expiry. So I hope I have been able to clearly illustrate the trade that I had taken along with the reasonings. And I do not know a couple of people that I have spoken to had really bad expiry experience today. And that is valid because if you are not someone who would follow rules and stick to your rules, the chances of getting trapped in such moves would be very, very high, right? Uh, there was a friend who had taken this particular move along with me, not along with me, he took his own independent trade. Uh, but then again, he did not exit the trade around here, or even when this doji was formed. He was waiting for another huge candle on the upside, and he booked loss in this particular trade, right? And he was trading in the current week's expiry option, which further deteriorated his winning chances. And then he ultimately closed the position in red. So that is the reason why I keep on focusing on the certain small, small rules which I follow. They are silent, but they are forever present in my mind, and I make sure that they are there in my mind. And whenever I see such things in the future, again, my mind would recollect the same, and I know how to react. A parabolic move like this means a quick exit has to be taken. You cannot wait for pullback and then further continuation. Okay, it might happen. It will happen in 1 out of 10 cases. But are you willing to risk the profits in rest of the 9 cases just because you want to capture that one big move? No. This move from around here till here already gave a very good profit. So I think it's better to pocket the profits when such moves come. So yeah, that's it for the trades that we took today. Now, this level is of no further importance for us because this levels has already been breached around and played around like anything. Price action was tacky today and it has kind of disturbed the charts, but there is a very keen observation that I have, and I'll be just be sharing it with you guys. Now, that is something which is an observation that I had. Uh, Not necessary that markets are gonna play exactly like that now. We are still above the trend line breakout. This can still be a pullback. Even if we break below this trend line, this area is still a support area for us as we extending this particular zone around here. This is the zero point 0.5 to 0.618 zone of the entire up move which was there on a high time frame. Now, if we are to move on a 1 hour time frame, I will be hiding all the drawings and I'll be using this particular tool around here. Okay, try to be with me. Now, this is just an observation. And in case if I am mentioning around here, in case if it follows, we have to make sure that we are prepared for it, right? So what is wrong with this? Okay, it's there. Sorry. If we look at this trend line, we look at this trend line. Market is moving in a channel. If we look at this, now this is, if we talk about technical analysis and chart patterns, this is a pole, this is a flag. Any breakout from here can give us targets equivalent to the length of the pole. Now you can consider the pole from this particular uh, swing low. So we still have around from 25,000 to around 25,400, which is 400 points. So we can above this particular at least 400 points move, which is there, should come. So 25,600, if that is the breakout, till around 26,000 is a minimum, bare minimum, which I am expecting. Now this is something which is on a hourly time frame. So I hope this is just an observation. That is the reason I'm not clearly, and this is not something that's going to happen tomorrow. So no trades based on this particular setup for at least till the price action confirms. We'll be drawing this particular zone around for our benefit. And we'll wait for price action to give us a confirmation above this. And then with a decent and good pullback, we will be creating a long entry. That is something when the price action confirms is what we will be doing, and I'll be tracking. So just to keep you guys updated about them, this can be a positional trade. Once that happens, we'll see what we are to do once the price action confirms. As of now, we are again in this particular channel around here. And for tomorrow, again, I'll be deleting this low. This zone still stays for us. We have a clear short trade. This is today's low, yesterday's low combined. Again, we got to be careful around here, right? Because this is the level around which any positive price action, we can look at creating a long also. Above this particular trend line, of course, we are long with our pullback. Below this, we are absolutely short. Now, say for example, market opens flat, breaks down below this, even on the short side trade, I will be trading with lower quantities. Still, I will wait for the market to give me clear indications, and my quantities on the short side trade will only be increased once we are trading below this zone of ours. Otherwise, any trades on the short side, of course, I'll be participating in them. But my plan will be to stick to smaller quantities. Now, again, if we are to draw a fib for this, is another zone that we need to keep an eye on. If we again open with a gap up around here, if we see a price action, we can create a short position again with smaller quantities. But this time around, we can stick for longer targets because we can at least target this particular low, if not below this. And a long entry can also be planned above this particular high. For now, I'll be deleting this for the sake of confusion, because this is still a far out breakaway zone. So that I do not believe will be something that we have to look or care for tomorrow. Now, please don't get confused about so many different setups. Now, these are as per the price action and the levels which are there. Now, the levels which are there and these particular arrows or the diagrams which I draw, you need to be careful about watching the price action around these levels. And then based on the price action, you need to take your call whether you are creating a long, you are creating a short. My only goal is to make you prepared for all the scenarios that can play out in the market. But then please, 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 the primary focus should always be on price action and as well as on market structure. Like I told you guys, we had planned a long entry above this particular, the fib zone, which was yesterday drawn around here. Market did give us a closing, but we did not take a long. I did not take a long simply because of the filters that I use. Okay, so there was a major RSI divergence, plus the amount of distance that the market had already traveled and the momentum was being lost around here. You can easily see with the size, the diminishing size of the green candles post this up move, right? around this, the momentum which was there. And now see, momentum comes in the market when people are trapped. People were trapped around here on the short side, and that is why you could see that momentum here. Now nobody is trapped around here, right? So there's no chance of any further momentum coming in. Yes, in case if the this fall would not have come and market would have given us a closing above this particular zone and then with a pullback, of course, I would be all in for the long trade. So I hope things are things are getting clearer with each video that I am posting. So stick with me, watch the videos completely. You can also rewatch it in case if something feels confusing. And again, a sincere request to everybody, please go and watch the RSI video. That is important. RSI is one indicator which has always been there on my chart for so many years. It has been there like a silent protector. It gives me reversals. It tells me when to get out of a trade. It also tells me, okay, even if we are at a certain level above which we had planned a trade, should we take a trade or not, right? So it is always there like a silent protector. So in case if anybody has not watched that particular video, please go and watch that video right now. And I'll pin that in the, it will show up as a pop-up in the around the end of this video. You can go and watch that, click on that link and watch that video. And please do not forget to like, share, subscribe, and comment on the video. I will see you guys again tomorrow, post the market. Till then, stay safe, have a good time, and thank you so much for watching. This is your Nifty Guy signing off for today. I'll see you tomorrow. Thank you.